Hello guys, good evening. So in this video I'll be showing you how to trade volatility 75 index on the lower time frame and how to use using the Fibonacci retracement. That is Fibonacci retracement is a tool that knows the retest of a zone after a breakout structure. So firstly, I'll just make this video very quick and understandable. So firstly, you want to know the trend line of the market, which is either the uptrend or the downtrend. So when market is making series of uptrend, when market is making series of higher highs, higher lows, higher highs, higher lows, continuously breaking structure, and this using the Fibonacci tool is basically knowing your trend line, that is the trend of the market, and spotting out a valid breakout structure. So when market is making series of higher highs, higher lows, and also lower highs, lower lows like that, so that is when you know your trend line. So now after marking out your using the 1 hour time frame, now basically I do start from the 4 hours time frame, but let me just use 1 hour time frame for the sake of the better understanding. So using the higher time frame, we just want to do a very quick top down analysis for volatility 75 now. So, and this same strategy has helped me a lot. So now starting with the 1 hour time frame, you can see that market is making series of downtrend, which is lower lows, lower highs, lower low, lower high, like that continuously. So in this lower low, lower high, there are retracements, and then what you can see inside is breaking structures. That is breaking structure. That is when market is breaking previous highs like this. So we call this zone a breakout structure, and we can see that when market closes with a full candlestick for the last candlestick that broke the structure. So now, getting to know that this is a downtrend, what we should be looking for is only sales. We should be looking for strictly sales on the lower time frame. So next thing we're going to do, we'll go to the 15 minutes time frame. Go to the 15 minutes time frame, and then so now let's assume that market has not made any movement from this zone here. I can't use the replay here, but let's assume that market has not made any movement from this just cutting from this zone out. So now we can see that when we had a market structure shift at this level, let me use the arrow. Okay, when we had a market structure shift at this level here, what we were looking for is a retracement to this level, but we want to know where the retracement will be. So after having a market structure shift, then we saw a clean breakout structure at this level. I'm on the 15 minutes time frame. This is a clean breakout structure. So where do we tend to look for a retracement to get our sales now? Sorry about that. So you then take your Fibonacci retracement, mark it from where the market started retesting to the origin that caused the breakout structure, which is this zone. Then there's what we call the golden zone, and the golden zone is marking starting from the point of 0.382 to 0.236. So that is your golden zone. So you then mark your that you then mark your Fibonacci retracement. Then your golden zone, you now take the rectangle tool and mark that zone as your entry. Just make sure the rectangle is in between those two digits. That will be your golden zone. So you now target a 1 to 3 risks to reward. Target a 1 to 3 risks to reward, and then your stop loss should be just a little bit above the rectangle. And then okay, this 1 to 5. So let's say 1 to 3 risks to reward, or 1 to 4, depending on what you want to risk. So 1 to 4 is what I use. Sometimes 1 to 5 or 7 if I know that the market is going fully on a downtrend. So 1 to 4 risks to reward. This is a very clean entry, and then full take profit. So let's look for another entry again. So now we are waiting for a breakout structure, right? We're waiting for a breakout structure, but here we saw a breakout structure. So we were waiting for a retracement, right? We are waiting for a retracement to this level. We are waiting for a retracement, but we didn't see any retracement, right? So we'll now wait for another breakout structure. So now we have gotten a breakout structure at this level. A clean breakout structure at this level. So now you then take your Fibonacci retracement and mark it from this zone to the origin that caused the breakout structure. Then you mark out your rectangle. Yeah. Mind you, we are still on a downtrend though. So we'll keep looking for sales till we see a change in market structure. So you then remove your this thing, your retracement, and then we're shorting it from here, and then boom. Make your stop loss a little bit close because we're risking 1 to 4, and then clean, very clean, 2/2 setup. Now you can see first we got this one here. Second, the second one, market didn't retrace to this level, but we'll still look for another entry because there's always a good entry for volatility 75. There's always opportunity. So this is the second setup. Okay, there is another retracement at this level. So this is a breakout structure here again. This is a breakout structure. So you take your Fibonacci retracements and mark it from where the market started retesting from to the origin that caused the breakout structure. So you then take your rectangle tool and then mark the zone out. You mark the zone out for entry. So this now becomes your short position. This now becomes your entry, and then you mark it. You target 1 to 4 risks to reward. Clean. 3/3 now. So if you continue like this, you wait for a very valid, clean breakout structure. So now this is another breakout structure here. This is another breakout structure. You take your Fibonacci retracement and then since market has started retesting, you wait for market to start retesting before you call it a good zone for taking the trade. If you didn't see market retesting, then just wait for a clean breakout structure, then you wait for market to retest. So now this is another entry level. So these are golden zone. You can see the sweet entries. So this is it. Then we'll short this to clean. Yeah, this is 1:4, 1 to 4 is to reward. So now you can see now that market has cleared the previous higher low which was made at this level. Market has cleared the previous low which is at this level. Now market has cleared this previous low. So now what are we looking for? Now we should be looking for buys because we have gotten a market structure shift. But for this to be valid, we are still going to wait for a retest. We are still going to wait for something like this, a retest. Then to market, we expect market now to come and clear this zone again. Then if we get a retracement breakout structure, then we'll start looking for proper buys to the upside. So this is just how I get and I trade my entries on Volatility 75, because following the trend, we will know that yes, we are strictly on sales, and if it's on buys, we will know that yes, we are strictly taking buys. So if you get the trend line on V75, the market is going to be your friend. The market is always going to be your friend when you get a perfect trend line. So next thing you do, you wait for a clear breakout structure. You wait for a clear and a clean breakout structure, closing with a full body candlestick of the previous low that was made, something like this. So after that, now you take your Fibonacci retracement, and I said the Fibonacci retracement is from this zone, the point of 0.382 to 0.236. That is your retracement level. So thank you and see you in the next video.